Awesome. Great. Thanks so much, Craig. I'm going to try to pull up my deck here so that we can dive right into it. Great to be here. And thanks for organizing another one of these great events. And albeit we're still new normal, I'd love to be seeing you in person and having some drinks together and sharing some good moments. But hey, let's make do with what we can, this new normal. So speaking thereof, let's dive right into it. In case you don't know us, we are Holt Accelerator. We are one of Canada's most active early stage fintech investors. We made 27 investments to date. And so that results in about 50 plus deals with our market network. Our market network is comprised of about 500 advisors now, which represent 50 financial institutions and about 110 either angels or institutional investors. And so what I mean by that is any one of those, we've seen one corporate customer has actually resulted in, or corporate partner has resulted in 4 customer deals for our portfolio companies. And that for every dollar we've invested has actually resulted in about $10 in investment for those portfolio companies. So we're really showing that market network has great value there. We're looking for the top companies pre-Series A who are in or entering the North American market and who have, we can give that network effect. All right, let's get into it. There's a lot of crazy stuff happening right now. In case you haven't gotten the memo, I think we all have because we're here. Fintech is very hot right now. So Q1 2021 has seen a surge, $23 billion of financing or close to. This is almost half the amount, or so actually greater than half the amount that happened in 2020. And 2020 wasn't a bad year at all. On top of that, we're seeing a lower amount of number of deals happening. So this means that there's a larger number of deal sizes that's occurring. Big winners right now where this is going. I mean, every vertical is pretty good right now, but payments is still owning the lion's share of this situation. But there's others that have grown substantially: digital lending, wealth management, capital markets, as well as SMB lending. Other areas that are performing, and we're talking double-digit growth only, areas like neobanks, insurtechs, and real estate. So just a lot of stuff happening. There's been pent-up demand to invest in this space over the last year, and we're really seeing that go through. All right, what top 10 trends? I'm going to try and fly through this, and hopefully I make it in time. So ESG, sustainability, huge factors. Global asset holders gauging or applying ESG, like 50% of them that are doing so, or 80% of them looking to incorporate impact investing into what they do. We're seeing the demand, this inflection point, big financial institutions asking, okay, how do I do this? How do I get up to speed and do this more quickly? We can see it from our portfolio companies like Fund Cedar, who has 17,000 active traders in their system, which you can actually track and identify the best ones, or built strategies on like index style on their existing ones in their platform, is getting a lot of demand for, hey, well, who are the best ESG traders, or what are the best ESG strategies, including like green shipping. But this goes so far down, like, I mean, in fintech, there is a lot of things that can be considered ESG. I'm talking financial health, right? Those living paycheck to paycheck is huge right now. And we're going to see this surge, like the new administration requiring banks to potentially monitor and improve their customers' level of financial health. We're just kind of expecting that to occur. And we're seeing that. Well, that's why we've invested. We've been bullish in the space with companies like Kuru that have reverse engineered the FICO score to help give you tips and tricks on how to improve your credit well-being and partnering with financial institutions so you don't get a no. There should be a path to credit recovery. And so we were very bullish in that space to see a continued drive there. Embedded and omni-channel approach. So where do we get these customers? These are kind of going hand in hand here. I do think one of the biggest areas for embedded finance is embedded insurance, right? Buying your insurance product at the point of sale in the story. We see that with like big car companies like Tesla or BMW, Volvo, Zipcar, all being able to develop insurance-related products at the point of sale. But we see that also on the buying cycle for lending products at the e-commerce and POS, buy now, pay later, right? A huge surge last year. That's why we've been big on this as well with portfolio companies like Loan Connect, who's built an infrastructure on originating systems and connecting to lenders to better support, the borrowers through their journey. But with all that said, though, still 97% of consumers believe a smooth and simplified experience is essential when choosing a bank, and the experience within the different channels more important than the medium. Okay, so yes, you might have all these funnels and way to engage them, but do you have a leaky bucket? So make sure your customer experience point 3 is important here. Accenture saying that up to 50% of banking tasks still manually performed. By using technology, we can save up in North America alone $70 billion while they're ready to be saved. There's just a shift in the way consumers are using it too. 44% of retail banking customers said they're using their primary bank's mobile app more often. We're big on this too, capital-wise. We've seen them build out digital workflows while maximizing customer insights and automatically engaging, for financial health purposes, is garnering a lot of success right now. So really focusing on that digital process is lots to do there. All right, demographics. There's tons of different areas to look at here. So we'll just cover a couple. I mean, the great wealth transfer is one of the biggest areas. We're talking in the next 25 years, $68 trillion to be transferred, in which 80% of these heirs are likely to actually look at a new financial advisor after the transfer has been made. So huge gap that is going to be, and then how do we best serve those new digital nomads in their processes? But it doesn't end there, right? If we look at 60% of the UK's wealth will be in women's hands by 2025. Comparing that with 73% of those high net worth individual women saying that they believe they have different investment styles, and that 36% of the women investors felt patronized by existing experience with their asset managers, or 25% wanted less jargon. So there's already issues with the existing way that they are being served. And there's a whole bunch of other communities to look at too. I mean, we could be talking either they look like either niche populations, but I'd say they're much bigger in terms of demographics than that. But we've invested in areas like a portfolio company, Manzel, serving not just the Muslim population, but those to provide Sharia compliant financing products, and has a huge backlog demand and has seen a great increase in terms of the amount that they've actually delivered in terms of financial products in the last year. All right, so let's shift over. We can't have a conversation without talking about big tech. This is just going to keep coming every year, year over year. Asia has seen one of the biggest, highest penetrations of big tech credits, with things like Alibaba leading the way, right? This may have to do with the changes in financial infrastructure, for instance, in the sense that 2/3 of Chinese citizens lack traditional credit histories, and that leveraging big tech to be able to underwrite these situations makes it easier. It doesn't stop there. Tencent WeSure insurance platform, just 2 years after launch, has 25 million users. But staying on the inside of insurance side, let's flip over to North America. Amazon has secured licenses to sell third-party insurances in India. Before shipping over North America, and partnerships with ACO General Insurance, but they're also leading the way in terms of lending programs to make it easier for working capital loans. And they made that partnership with Goldman Sachs, and there's billions of dollars of loans that have been provided. Stripe Treasury has partnered with Canadian Shopify to offer merch financial products. We also know PayPal has been making headway into here and actually targeting more of the gig workers and freelance. And most recently on PayPal, just recently announced they will introduce savings accounts, stock investing, and checking cashing services later this year. They're hitting crazy growth right now. They had 73 million active user accounts in 2020. These are 2 quarters of massive increase, record growth. They have 377 million users right now. On PayPal also, we can talk about buying and selling cryptocurrencies. And there's other big tech that are doing this. We're expecting Facebook's Libra and DM to be launched later this year. And we know Elon Musk likes to play in this space. Jokes around Dogecoin, but also shifting a lot of Tesla's working capital into Bitcoin. So lots of stuff that's happening here. Open innovations, don't have time to cover all these. Just know that a bunch of different big financial institutions usually play in different areas of the spectrum to the degrees of varying success. It really comes down to their ability to efficiently deliver. But what we see here is just a trend towards more API services so that they can better partner and collaborate into different levels. It could be a way that they do referral systems. So for instance, one of our portfolio companies, Honest, who's really serving the top of funnel on the mortgage side of things, has partnered with lenders, but they can help them with other financial products, and even had referred stuff to one of our other partners, in this case, Fairstone, who's built out an API system to better plug into these kind of referral companies like that. So it could be more like a referral system engagement that we're seeing. In some cases, we see a more deeper level of applications that are being partnered with. We have a company like Talem Health Analytics. That example, just with a photo of a car crash, that you can then have the medical practitioner review that for better diagnosis and pass that on to the insurance carrier. So better collaboration between all parties. But then the insurance carrier, obviously, very interested in using this technology, so a deeper integration in terms of app, but all the way to core systems. And we've seen that insurance carriers and brokers start to say, well, maybe we're better suited just to focus on what we do best, right, is managing that risk and leave the tech development to others. And we've seen that with Centro, one of our portfolio companies, who has tons of experience on Cobalt and knows the challenges within, but have flipped onto their systems. They have more modular systems to build more tailored group benefits here. And it doesn't end there. We've seen the wealth tech side, like the idea of platform as a service, or asset managers are saying, hey, can we just find a platform and build off of those existing services? And we've seen that way, for example, in capital markets with WealthBlock, who the capital raising platform, and has lots of success there at this point. All right, so let's flip over. Won't spend too much time on compliance because there is tons. So I just wanted to give some examples because a lot of it is around data protection, privacy of the individuals right now. So GDPR is a great example. That is when it got passed. This was something where 88% of companies spent more than $1 million in preparing for GDPR. And 70%, and this is on the European front, well, mostly, 70% of those companies agreed that these systems put in place that they put in place will not scale as new things come about with new emerging regulation changes to the GDPR side. So that's already heavy and costly. And then on Canada front, PIPEDA, we're looking to see that shift with Bill C that would occur in all the other provinces, which are shifting in their own right ways to build those systems. So there's going to be a lot of changes in how do we comply accordingly. So we're very bullish on this. We've invested in different technologies to support this, from like Mat AI as an example, like a digital wallet to be able to manage your identity and interaction with other parties, whether it be financial institutions or governments, including, as well as even Lexalign to manage third-party risks. So it's not just about the data that you're doing in your compliance process, do it, but what about all your third-party vendors or all your existing customers, and making sure that they're compliant in their processes. So there's tons of stuff to do, and we're only thinking that's going to increase through time. All right, we're flying through here. APIs, AIs, UBIs, IoT, fun buzzwords just to kind of rattle off here. We're seeing that about 70% of capital markets leaders use alternative data to boost performance to a certain extent. So AI is still a lot of talk, and I think we went through that super hype cycle and came down a little bit because at some point about 36% have said like, hey, we struggle to capitalize on the technology. So we definitely see a more willingness to still engage with it, but it also embracing that, hey, maybe we should be looking to alternative providers to do so. And we've seen that with one of our portfolio companies, Relatively 6, who's in the insurance space and has phenomenal backgrounds in AI and has built up really proper data lakes to be able to get better contextual situation around the customer to get better insights on either cross-selling, upselling, but just a better service ultimately, and seeing great uptake right now. The other side of things is if we look at it, the UBI, so usage-based insurance is staying in that pocket right now. At the end of the day, it's going to save costs to be able to do it from the insurance carrier. So of course they're interested in using this, but also on the demand side from the consumers, we're willing as consumers, roughly 70% of the time, to be tracked accordingly if it can yield discounts on services, right? So if we're happy to have our vehicle tracked, we're happy to install smart sensors roughly about 70% of the time. So definitely a growing need here, and we're only going to see that to increase. All right, couldn't have a good panel without of top trends without trying to touch on all the. I know you guys. There's another panel previously on crypto blockchain with Ethan, who's fantastic, but lots of stuff in the space, right? NFTs is a lot of the hype right now. We've seen so much so that $70 million for a piece of art. American digital artist Beeple's work every day is the first 5,000 days. ICOs were all the rage back in 2018. We saw that March or so, and then there was a 90% just noise, but they're still occurring. We're still seeing a lot of tokens that are being created. It's very challenging to truly understand the economics. Like, these are deep sort of monetary systems, so it's tough to still figure out which ones are going to be held and which ones are true right now, but still a lot of new coins being whipped up. And that's where, for us, from our perspective, at least, we said, hey, well, if with this gold rush that's occurring, it's good to invest in the picks and shovels and the infrastructure. So to give you an example, we invested in a company like Concealing Crypto that partners and plugs into all the different exchanges, about 90% of all the exchange data that's out there, to be able to infer different systems and patterns, and could be using this data for either market making or being able to seek alphas in the story. So we still think there's lots to do. There's going to be shakeout, and there's still a huge purpose for these coins. The underlying technology is fantastic, and you've already heard from Ethan, so I'll skip over some of the benefits there, I'm sure. The other thing is the idea of STOs, securitized token offerings, still very bullish. We're starting to see increasing movement. The regulatory environment's making it more frictionless. Finance is always about removing friction and facilitating trade more easily. And we're starting to see more STOs. We backed a company like Solid Block that tokenized real estate, better facilitation on the secondary markets, creating more fungibility. So this comes into play when you have more funds to work with. And we're starting to see more, actually, some new VC funds be launched that are actually completely tokenized from the start. So we do expect more to be happening here and occurring. Shifting forward in cybersecurity, so building off the crypto, they're actually one of the biggest areas for breaches that we've seen is in the crypto space, and usually it only has to do with just a simple line of code or even just a number, like adding a 0. We've seen breaches and hacks clear out the vaults in this case. But cybersecurity is, I'll say, trend number 10, and could maybe be number 1 in some ways. Like, $6 trillion in costs are projected by in 2021, and projected to hit 10.5 trillion. And Gartner expects that we're actually spending about $170 billion to protect. So we're not protecting enough versus the cost. And the budgets might actually shrink. And the biggest reason for a lot of these has to do with just poor establishment of the databases, right? And kind of opening up these backdoors and causing issues for them to come in and hack accordingly. So a lot more sophistication here, lots of areas of concern, but also hopeful because we've invested in portfolio companies. I'll give you one example, Owl, for which had multiple suite of products. So with just your name, they can get up to 70 data points. And we're able to, through this, then be utilized for different purposes, whether it be to better sell to you or to do augmented due diligence. But where they really found their go-to-market was obviously fraud right now. Unfortunately, so the surge in fraud-related activities during the pandemic, so much so that they 4x their revenues in less than 6 months and continue to just grow rapidly at this point. So there you have it. There's a quick rundown of about top 10 trends we're seeing and some of our portfolio companies as an example. Happy to field any questions, but hopefully you enjoyed, and definitely curious to hear from your side. What do you think is the hottest places right now?